And we are live finally. So we had a nice little intro here, the 3, 4 minutes, and I actually forgot to press go live. So now we're actually live. Welcome everyone. Today I have with me Dirk Hartig from Prime XPT Academy, and we are going to talk about some of the mistakes we did in 2022 and how we can learn from these mistakes and how we can, improve into the new year. So how are you, Dirk? And let me know how many mistakes you did last year.
How much time do we have to talk about all my mistakes? 5 hours, 5 days, 5 months? No.
Yeah.
First of all, Happy New Year, everybody out there. Thanks for having me again on your live show here. Always a pleasure to be here and talk about the markets with you. I hope, of course, that 2023 in regards of green candles in cryptos and other risk-on assets is going to be a little bit nicer than 2022. And yeah, mistakes. Just now when we thought we were live already, I said there's like one mistake I made last year. Looking back now, where I really can only shake my head and think like, oh my God, Dirk, even after doing this for 25 years, you really acted like a total beginner there. So that is good. My biggest mistakes, of course, there are smaller ones that kind of add up. By the end of the day, of course, nobody's always perfect all the time. And it's the mistakes you learn from after all, hopefully.
Yeah, and I think you have to also differentiate between, normal mistakes and, really, stupid mistakes. Like,
yeah,
we because we do make some mistakes on a regular basis when trading, because we're just humans. We can't do everything perfectly, but as long as the mistakes are minor, it's in my opinion, it's okay, because we're always going to make mistakes, because if we have that goal of being that perfect trader with making no mistakes at all, you're gonna have a hard time, and you're going to you're going to lose confidence quickly, because we're always going to make mistakes. I think one of the main thing that I'm not sure if it's a mistake, but it's something that I've learned throughout the years that is getting better and better with every year, and that is over trading. I think with every year, every new year, I go through, I do like a yearly market, like a yearly trade journal analysis, and I always
yeah.
see that for every year and every month of the year, I trade less, but my profitability and my gains are, stays the same. Do you have any experience like that when you first started, or when, like, because you've been trading for over 20 years, right? And I've been trading for 6 years, so there's a huge difference here. So in the beginning, did you have anything like that going on, where you traded a lot in the beginning and then you kind of started trading less with time?
Yeah, of course, like as probably everybody out there in the beginning, I was more focused on like the lower time frames. So I loved the minute charts. I loved the 5-minute charts, especially back then in stocks and index futures that I was trading for a bank there. And, I was trying to write that up and down. I was not at all profitable. On the contrary, I was net losing money, which obviously the bank didn't like back then. And my mentor back then said something that kind of ingrained into my brain, and that I every now and then have to quote to say again to myself to come back from this habit of over trading. And that was, Dick, if you are not bored as a trader 90% of the time per day, you're doing something wrong. It's not about doing 100 trades a day. It's about waiting for this one perfect moment where all the stars line up, and then you execute it. Then you got to be there, which, by the way, is difficult, because the market kind of dulls us in. When there's no opportunities, you get like, so boring. I'm going to do something else now, focus my mind on something else, and then bang, the opportunities there. So yeah, that definitely happened throughout the years. Is exactly the journey you are doing, as it seems at the moment. I got more quiet, I got more laid back, I moved away mainly also from the very low time frames. I think at the moment the lowest time frame I'm actually trading is like the hourly charts, and very rarely 5-minute charts, because it's so much easier. It's so much more stressless, really. And if you end the month and let's say you have gained 5% doing just a handful of trades, maybe 5, 6, 7 trades, maybe even less, maybe just one trade that you did per month, but you hit the target that you wanted to have, then it's a good feeling, and it's much more stressless than doing this with 500 or 5,000 trades and so on and so forth. So absolutely, I think nowadays it's even harder not to overtrade if you're a trading beginner, because the way a lot of trading apps are designed is that it feels like you're playing a computer game. It's very easy, so that's a good thing. The UIs are very simple to use. You have a red button, you have a green button for buy and sell. You just need to enter the amount, and then go charting is available everywhere. So it's very, very easy, but it also kind of makes you want to do more. And it's really almost every time, 95% of the time when I talk to beginner traders, and I ask, so, on what time frame are you trading? It's usually 1 minute or 5 minutes, they are telling me.
Yeah.
And this is like, like you're learning to drive, and the first car you want to place your butt in is a Formula One racing car.
Exactly. It's the same thing here. I have my my community in the trading program, and most of the people coming in, they want to be trading the high time frames. Like they say, like, I want to be a swing trader. Because most of the people are obviously not professional traders doing it full time, so they don't really have the time to be scalping, but they're doing that anyway, right? And it's probably because they feel like the lower time frames, that's where the action is, that's where the dopamine kick is, all of that. But they want to be swing traders, right? And I think that journey, we all did that journey. I mean, you talked about how you went from trading lower time frames and then looking at swing trading. Before we go into that, I just want to say a huge thank you to PrimeXP for sponsoring this live webinar right here. So if you want to sign up to PrimeXP, you can do so by using the link in the description below, and with the code LIBS for the two, you will also get up to 7K deposit bonus. And don't forget to follow Dirk and PrimeXP, and all the links to follow him is in the description of this video. So I want to talk about the aspect of how trading should be boring, and then the boredom of trading and over trading, because I really do think that is a major problem that most traders are facing, especially new ones. So you're starting with scalping. Most people do that, and it's probably because we are taught as kids and growing up and through school and everything, that the more you work, the more money you're going to make, right? The more you work, the more money you're going to make, right? So if you wake up like in 4 a.m. in the morning, you rush down and you take a ice cold shower and you do like a workout, and then you work for like 12 hours scalping, you're going to be a millionaire. Well, if you look at professional traders like myself, I wake up, I have a long breakfast, and I take it easy. I go down and I scan the markets for 20 to 30 minutes, and that's it. Place alerts, and if there's any alerts, I might take a trade on that. But other than that, there's like, I'm not at my desk all the time, just looking at charts and drawing levels and taking trades and like making millions in a trade. It doesn't work like that, right? So, and it took a long time for me to realize that to become profitable, I had to take a step back and watch the markets from a completely different perspective, instead of me coming down and trying to conquer the markets and owning the markets. I have to let the market control me, right? And I have to let the market kind of take control over my trading. So what you have to do instead, you have to have the perspective of you want to listen to whatever the market wants to tell you, because the market doesn't give a shit about you. It's never going to listen to you, whatever you want to happen. The only thing you can do is just let the market tell you whatever it's going to do. So for example, you have an interesting setup that you're looking at, and instead of trying to like trying to take that trade. You instead wait for the market to give you all the signals you want to see before you take that trade. A lot of people want to get in like before that happens. And would you agree with that? That's maybe
Yeah.
something you experienced as well.
Yeah, absolutely. It's also that, even if you are that patient and you wait for this perfect setup, and maybe you see a setup that's like 65% perfect, and you decide for yourself, okay, I don't want to take this trade because I want to wait for the perfect setup. But then the 65% perfect setup actually does what you would have anticipated it do. So that also makes you like, maybe I should modify my system. Next time I also take those 65% perfect setups. Oh, and then next time 50% perfect, 40%, and so on and so forth. And you start making all those mistakes again. The beauty of a market is, by the end of the day, in my opinion, there are every day new chances. Just because you missed a chance, you can be sure down the road, a day, a couple of hours, a couple of weeks, a couple of months, there's going to be a new chance. Exactly. And it's going to be as good as the one you just missed, if not better. Missing a trade, it's normal. It's nothing. Don't focus on the past when it comes with trading, except maybe you are backtesting your system. That's a whole different story. One aspect, in my opinion, that also comes in here is that, and we see that, for example, with you, in my opinion, that's a perfect example what you are doing here. You have a nice breakfast. I have the same. I have this ritual of having a good breakfast with my family in the morning. It's very important to me because very often I don't see them in the evening anymore because I tend to work quite late. Not because I'm staring so much at charts, but I'm kind of a night owl, and so this is important for me. And yeah, that also means probably that I might miss a chance or two that presents itself before 9 or before 9:30. It's okay for me. It's a price I'm willing to pay. Because it adds to my mental health, being with my family there. And another thing that happens once you become very confident with your system, once through backtest, through trading it live, it works. Not all the time, but it makes me money by the end of the year. So it's profitable for me. The next step you are doing is you automate the whole thing. Automate, for example, in a way, I do that. I think you do. You have done this as well. That you, for example, put alarms on TradingView. So you just need to focus attention to the charts once an alarm is triggered. When like, okay, this is now an interesting area where my trading system says I should do something. Then you can decide, is this a perfect trade or is it not a perfect trade? So it really gives you back so much life and the ability to focus on other things. And we all also know this phenomenon that sometimes you get good ideas when you are under the shower or sitting on the toilet or something like this. When you do something that has absolutely nothing to do with trading, for example. I always have that too. Like I like to go for walks. There's a nice forest around the area where I live here, where I like to go for a walk, at least when the weather is not as shitty as it is at the moment here in Germany. And very often it's like when I walk there for a half hour that I get an idea, because I call it, I come into the zone where my brain becomes open to new or can rewire itself and sort out all the garbage. Very philosophically, sorry.
Yeah, but that's very important, and you mentioned something as well. When you talked about how you like to eat breakfast and you keep calm and you spend the time with the family because that's important, and it's not important because you make money doing that. It's important because you that's something that is good for your mental health, and that mental health is what will make you a better trader. So I think what's important here is we're sitting here and we're not talking, and this is very important to understand for new traders watching this. Like if we want to help new traders, most of the people coming in here, they probably expect us to give them a specific trading system. Like, this is how we're going to help you take this trading system. But the reality is you can be profitable in the markets with a stupid, simple technical system. It really is very simple to have. All you need to do really is to have something where there's somewhat of an edge. You have to have like you can even be profitable with 40% or even 30% win rate, right? But there needs to be some type of edge in the win rate or the risk to reward or the overall profits, right? What really separates the unprofitable or the break-even traders to the consistently profitable ones is the mentality, and specifically having a consistent approach, right? So and it's almost impossible to have a consistent approach in trading with an inconsistent mentality,
Yes.
and especially when we're talking about how you're supposed to be bored when trading, like you're supposed to be bored when trading. Now that is a huge, a huge problem when it comes to the mentality of trading, because it's not easy being bored, right?
Yeah.
It's not easy being bored. It's not easy doing nothing, right? Most people would say that the easiest thing to do is to do nothing. But when it comes to trading, there's so many things that will try to trick you into thinking that this is the trade that you should be trading. Um, so I think,
I
yeah,
mean,
working
it's
on.
like doing nothing is not easy. No, I mean, we all know that. If you ever try to meditate, for example, really shutting down your brain, it's not easy. It's almost impossible, especially in a profession like this, where there's like so much happening around you. You always so it's kind of like being having ADHS, I think it's called, as a
Mm,
trader. However, I think also like the media, especially Hollywood movies and so on, they of course paint a totally different picture of traders. Yeah, we have this
yeah,
picture of, as like yelling going on the trading floor. Some guy, on the phone, I want to short here 250 billion US dollars. And yeah, I bought it back. I earned 25 million, but I was down
yeah,
100 million. Or it's like a casino, when in reality, it's not. Every trader, every profitable trader I know is like, has this very, very structured day, almost boring day, where, like you just said, where people probably would say, my God, doing this and this at specific times every day, that seems like very boring. What does that have to do with trading? But it's the same phenomenon, in my opinion, that we see and sorry, Lips, I've said this very often, I'm going to bore you now, in professional sports. If you watch somebody like Tiger Woods in golf, for example, when he approaches the ball, he always does the same things, like a wiggle with his club, like with his shoulders, always the same. If he is disturbed while doing that, he will reset and start this pre-shot routine. Let's say again. This is what differentiates pro sporters from amateur, from very, very good amateur sporters. And I think it's the same in trading. As a matter of fact, I think it's the same in every profession.
yeah. And I think the reason why I believe most professional athletes and traders, but looking at professional athletes, that's a good example, because that's something people can understand, and it's something that we know, right? And they usually have routines and habits, like and the reason for that is they try to get into that flow state of mind, that zone where they know that they perform well, they perform without hesitation,
Yeah.
and it's almost intuitively and automatically, it just happens, right? And that's what you need to do as a trader, as well. So you need to work on that mentality. You need to become very good friend with yourself, right? and and
Yeah.
and, and your own mentality and your own emotions, and be okay to be completely bored in the market, and be able to do absolutely nothing at all. And the reason is you want to really be able to tap into that flow state of mind. And what that really means is, for me at least, it means being calm and mentally balanced, and especially emotionally balanced, where I can identify my own emotions before I take a trade based on bad emotions. So imagine, for example, I get a signal, and it's not a good signal, but I act on my impulses before I can
Mhm.
identify the emotions that lead up to those impulses, right? So being in that flow state of mind is a lot, for me at least, it has a lot to do with being calm and balanced mentally. And what I do is it's very important, very interesting. You talked about automation, right? How
Mm.
we go from beginning of trading, we go from trading the lower time frames and taking a lot of trades, and then taking fewer trades, and maybe looking at the more swing trading, and then we want to automate it, right? Because we understand that the less we look at the charts, the the less is the risk
Mm.
of making a mistake, right?
Yes.
Because I like that. That's one of my main reason why I want to automate things, because I don't want to make mistakes. And where do I make mistakes? Well, I make mistakes in technical analysis. I take
Yeah.
trades too impulsively, and you don't have to have, like, I have my indicator, right? But you don't have to have an indicator to automate things. You can use, TradingView has some really good alert system. So there's tools where you can set an alert, and then when that alert goes off, it gets forwarded to your email, or text message, or Telegram, or Discord, or whatever, right?
Yeah.
Even with a picture of a chart. So if you learn to use the alert system in TradingView, you can really automate things as well.
Mm.
If you do your scanning on the daily and the 4 hour, and then just add alerts at every level that you think is important on every pair that you're interested in trading, after you've added those alerts, there's absolutely zero. Uh, there's no reason for you to even look at the charts again until the alerts goes
Mm.
off.
And by the way, guys, if you're watching this and you are interested, like in how this whole process of having a new system, back testing it, and then starting to slowly roll it out with live money, if you're interested in that, please do me a favor, come over to my YouTube channel. There's a link also to my Telegram group, and I'm exactly doing this there in the Telegram group at the moment. So I hard coded one of my trading systems last year with really countless hours went into developing and hard coding this, maybe especially because I'm not a very good coder. But there are luckily people out there that you can hire that can help you with the more difficult aspects. And I backtested this system, looks very, very promising. So I said, okay, beginning of January, I want to roll it out. I want to trade it on an automatic level with a real money account. So that's what I'm doing right now. And I'm making the whole process transparent. So in my hope, of course, is that not that I want to share like, oh, there are my trading signals and everybody has to trade those by all means, but I think it's an important step. How do you go from, hey, I have found a system, and how does it translate now into real life trading? Because just because your trading, your system was profitable in backtest does not automatically mean it's going to be also profitable with real life money. And I think this is really a process that is not enough talked about by so-called YouTube influencers and other people out there. I know you are doing this as well in your training group, and yeah, I kind of got inspired by it, to be honest.
Awesome. I love to hear that. And definitely, guys, check out the YouTube channel, and every link that you need to find Dirk is in the description of this video. I'm really honored to hear that you're inspired by what I did. That's awesome, especially coming from you, which has way more experience in the markets than
Yeah,
I
but
have.
that's
That's
dangerous.
very.
Just because you have more experience in like as somebody else, and that doesn't mean you should build your ivory tower where you look down on everybody. That's a recipe for disaster, in my opinion.
Yeah, absolutely. That of course, I definitely agree with that. I think so what I want to go back to some of the mistakes we've done, especially some of the mistakes I've done last year. And you also talked about back testing, and
Mm.
if it's something I've done this year, not this year, but last year. So 2022 for me was like the year of back testing, really, because I created that back testing template. And I actually created that back testing template a couple of years ago, but I refined it in 2022, and I spent so many hours testing things and refining my system. So if it's one thing I would recommend, like, it's so frustrating. Honestly, it's so frustrating seeing new traders come into this game, and they're like, most people are doing everything wrong. Like, they're doing everything wrong, and I know that I did the same thing, and you probably did the same thing. It's a process. Everyone has to go through this process. Unfortunately, a lot of people go through that process and they lose a lot of money. Sometimes they lose everything they have. It's a horrible thing to see, because they're being led on by some huge influencers. Like you said, a lot of people don't talk about this on YouTube because they're not getting that crazy engagement and that insane viewing and stuff when they talk about this, because it's much easier for me to have a title that says, this is going to make you millions, and then make a thumbnail with me screaming saying you're going to become a millionaire if you take this option, this strategy. And then I give them a simple scalping strategy. And I say, if you follow this, you're going to become a millionaire. And somewhere in there, it's actually true, but there's so much more around it. You got to backtest, you got to do all of that and all of this. So people, they start in the beginning with finding a system from some big influencer on YouTube, and then they just go out with real money and they start trading it, and they have no idea about stop loss placement and backtesting and journaling and all of that stuff that we've talked about, right? And they lose it all, and they say, trading is not for me. While I believe that what you really need to do is, before you even start trading, you need to actually test the system, right? You need to test the system. It's so simple in hindsight. If anyone watching this and listening to me, you know what I'm saying. You understand that you can't just take a random system and then start trading live without even testing if it works or not, right?
And interestingly enough, like another question that always pops up, of course, is like, oh, I don't have a lot of money. How can I find somebody who gives me money for trading? Like trade for other people, become a money manager, and so on. And I think this is a good way to go, by the way. But if you're looking for somebody that to manage money, the real professional investors, they are not going to ask you things like, so how many percentage of your trades were profitable? What they are going to ask you is like, how's your Sharpe ratio? How's your average win compared to your average loss? Because that says much, much more about you. And all these things you just can find out. You can find out if you, first of all, backtest your system, and if you have a trading journal also going live where you note down everything and then can deduct those risk numbers from that.
Yeah, definitely.
So
it's
super
a very
important part of the game.
Yeah, I mean, I can look at my yearly my max drawdown, I believe, is like 4%, which is like very, very low, right? And that is max drawdown for the last 2 years. So it's relatively low. If you look at, like, it's very low. I've been lucky of not having I don't know, like, I think I've managed my risk very well when it comes to losses. Only max drawdown is like -4 or -5 in like two years, which I'm proud of that, right?
Yeah, you should be righteous. So
yeah, but then of course, with that drawdown, like, it could have been 20 and my profits would have been much more. But if you talk to an investor and you want that person to invest in you and give you money, they ask you, what's your average drawdown? If you're going to say like, it's 30, they're going to be like, no way. I don't want to see my capital go down 30% before I make profit. If you say 4%, all right, that's okay. But then the investor knows that if you have an average drawdown of 4%, you're probably not going to be making more than 20-30% a year, maybe up to like at max 50% a year. In it's what I'm thinking, something like that. But that's if you have let's say you have $1 million, it's pretty good. It's pretty good money.
It's fantastic. I mean, that ratio is it's amazing. Even if you have a drawdown of 4% and you make 12 or 15%, that's already amazing. Every investor out there that knows his or her math and knows a thing about risk is going to tell you, well done, And it's really like you say, imagine you get 10 million from somebody to manage. And you have a drawdown of 30%. So that means if things really run against you, you have 10 million and then suddenly there are only 7 million left. This also does something to you. because you'll always be hunting this, oh my God, I have to catch this up. I have to catch up again. I have to catch up again. And that's might be easy to do if you're trading with 1,000 and it goes down by 300. It's also quite, of course, a lot of money for many people out there. But if you are down like by a couple of 100,000s or even millions because of your drawdown, that's a whole different story. What this really does something to your psyche and to
absolutely.
your
I mean,
decision-making process.
Yeah, and I mean, if you have a drawdown of nearly 50%, which I know a lot of people have when they're starting out, if you have a drawdown of like closer to 50%, you have to actually double your account to get back to break even.
I
And
mean,
when you start trading and you can ask yourself like, how can I double my account? I'm gonna say, it's almost impossible to double your account in a short amount of time. So if you're down 50%, you're in a hole which is almost impossible to get out of.
Absolutely. And how many trading strategies are there out there that advertise something like, I'm making like 2,000, 3,000%, but the drawdown is like 98%. And if you join a strategy like this and you get hit immediately by this drawdown of 98%, those 2,000% performance are not going to help you, because it's just going to bring you not even back to break even then. And but still,
absolutely.
I mean,
It's and I think so kind of going back to some of the mistakes I've done and what I've learned from this year is not over managing. And I also it's one, not over managing the trade. I think that's the first one. And then the second one is I wait for confirmation with my trading. So there's different types of traders out there. People who see a level and they buy that level, regardless of what happens at that level. They're going to place orders at the level because they see a trend and they look at that level as a highly probable place for price to bounce. So they place orders on that level. What I do instead is I wait for confirmations. I wait for price to come down into that area, and I want to see specific price action that tells me that price is ready to go higher. And actually, it's quite simple. All I want to have is like a 4-hour engulfing candle, bearish or bullish, depending on if I go long and short. And that's my confirmation. If I get that, I take a trade. Some of my worst mistakes last year was not waiting for confirmation, not waiting for that 4-hour candle. And it kind of goes back to following the plan, right? So what I did when I did not wait for confirmation is basically I didn't follow my plan. And I think that is a major part of any type of trading is follow the plan of the trade. And when I say plan of the trade, I don't mean the specific plan for just that individual trade. I have a system, right? A trading system with very specific rules, and I need to follow those rules. And when I don't follow those rules, I don't follow the plan, and most likely I'm going to end up losing money. So do you have any when you're trading? I'm not sure if you're waiting for confirmation or if you're just buying the levels you like when trading.
Yeah, no, I'm more. You are more of a trend follower trader. I'm more of a contrarian trader. So I like to try to pick tops and bottom, at least for my swing trades. And it's not something I recommend doing, by the way, for the beginning. You're much better off being a trend follower too. It's the easier start into trading, but being a contrarian somehow fits more my personal mentality when it comes to trading. And so I don't wait for confirmation. But talking about mistakes, I want to tell you what my biggest mistake of last year was. And because I said in the beginning, it's still looking back one mistake where I think like, my God, Dirk, you cannot believe you've been doing this for 25 years. You behave like somebody just starting this. And that was information bias. So when Bitcoin came down in 2022 from 40 to 30,000, I started buying at 38,000. And every $2,000 I had my buy orders aligned already, because I was convinced we're not going to drop below 30,000 in Bitcoin. I remember it was around the time, I think, last year where we started live streaming. I remember me talking about that on the live stream. And I had all this beautiful data to back up my opinion, like on-chain metrics and other crazy stuff. And of course, we broke down. I mean, we know where we went with Bitcoin. And I totally reversed the position later. So it didn't do as much damage as it could have done. But looking back now, I was suffering from information bias, which means I was so convinced that I'm correct about this that I was only looking for information that supported my opinion out there, be it on-chain metrics, be it economic news, be it technical analysis or technical indicators, and so on and so forth. And this is something you shouldn't be doing as a trader, especially as a professional trader. You should always be open to the possibility that you are wrong. But I maneuvered myself there in a corner with my opinion, with being biased about the information that was out there. And this is normally something I haven't done for a while. So looking back now, I was surprised, like, hey, how come you fell into this hole again? How you didn't do that mistake for quite some time, but how come you married yourself so much to a position? I mean, I had my stop losses in position, of course, under 30,000, but I was surprised. I was totally surprised that I was wrong on this trade up to this day. And so going forward now, of course, this is hopefully in 2023 a mistake I'm not going to repeat. Cost me a lot of money there, but righteous so. This is how you have to pay the market to learn from your mistakes. It will always cost you money.
Yeah, that's a great point, and it's also, I mean, that's really a great point, and it kind of goes back to the saying where you want to have strong convictions loosely held, right? So you want to be like really, really sure about your idea, and you want to be very confident in your idea. But as soon as that idea gives you an idea of it being invalidated, you switch mindset like directly. You have to be very, fluid in the markets. But when you have an idea, you need to maybe not be 100% confident that it's going to work out, but you have to be 100% confident in you following that plan. And within that plan, you're going to have a very clear invalidation level as well. And actually, with my way of trading, which I'm quite happy with the way it turned out and with the way the system turned out and everything, is I'm never gonna have that problem, right? Because I have my technical system. I don't trade based on fundamentals or based on any high time frame ideas. I have just a very, very specific system following the trend of whatever asset I'm trading. And if the stop loss gets hit, then the stop loss gets hit. And I have rules for how many stop loss in a row I can take before I have to take a break. So for me, that will never happen, which is a huge improvement from what I did in the past before I had this system. Because before I had this system, I could have said, it really feels like Bitcoin is bullish, right? It really feels like Bitcoin is bullish. I'm going to be buying, and I become convinced that Bitcoin is bullish because all I do is I look for analysis and information that confirms my bias, right?
Yep.
So I'm getting more and more convinced over the fact that I'm going to be buying Bitcoin and it's going higher. And when it doesn't, I freeze, right? I don't really know what to do because I didn't imagine price going the other way, right? I was completely convinced that it's going higher. And I think that was those mistakes. I mean, they cost me a lot of money because it's really the trades where you don't really have a solid exit strategy. Those are going to cost you a lot of money when it goes the other way around. And I think it's those trades which kind of motivated me to create a not only the system but a approach where I'm only going to trade and the only loss is going to be the stop loss, right?
And this is how it should be, by the way. I mean, you always can go in two directions. When you experience something like this, you made a mistake, you either give up, say like, screw this, it's not meant for me, I don't want to do this anymore. Usually because you have difficulties admitting that you made a mistake. It's a big part. I remember earlier you said, as a trader, you get to know yourself very well. You have to become friends with yourself. And I had to smile a little bit when I heard this, because trading is going to confront you with your worst nightmares and your biggest weaknesses, and very fast, and usually also when you expect it least. And you can either say like, oh, it's the broker's fault or it's the market's fault. or it's somebody else's fault. It's Dirk's fault, or it's Jonatan's fault. Dirk said Bitcoin is probably not going to fall below 20,000. Dirk, you said this like 8 months ago, and now we are below 20,000. Yeah, but the fundamentals have changed. So my mindset and my trading plan has adapted to a new reality. And so, yeah, sorry, I forgot what I wanted to say initially. Oh, yeah, now I know again. So the other way you can go is what you did. You have a mistake, and then you find a way that you don't make the same mistake anymore. And for you, the way was developing your trading system, that it's like highly automated, that it takes off this information bias off your shoulders, that you don't need to have that anymore because it's already encoded into the system. So that's a very good way, in my opinion, of dealing with this. You make a mistake, you either give up, or you find a solution that you're not going to make the same mistake again. It's not going to protect you probably for all eternity, but it's an important step, in my opinion, on the way to becoming profitable and professional.
Yeah, absolutely. I mean, I remember, I remember when I started, and I was so impressed with people. Like you get questions sometimes on Twitter asking like, what do you think Bitcoin will do? Like, what do you think Bitcoin will do tomorrow? What do you think Bitcoin will do next month? And what will Bitcoin go up or down? And then questions like, how do you think the FOMC will affect the price of Bitcoin? And it's such a liberating feeling to say, I don't know, and I don't care, because I don't have to know anything because of the way I'm trading. And I remember when I started trading, all I wanted to know was like, how is this obscure macro event, down here in a country I never heard of, how is that going to affect the price of Bitcoin? Because I had no other way of trading. I didn't have any technical knowledge to trade. So I tried to just understand where price is going from fundamental events and stuff like that. And I remember people saying like, I don't know where price is going, but if I'm wrong, I'm going to get stopped out. I'm like, how does that work? And now we know exactly, of course, how that works. And I think it's just a beautiful way of approaching the market. And I think it's much easier to get into that flow state of mind when you actually have that approach of anything can happen, and that doesn't really matter what happens. All that matters is, I know I have a long-term edge of the system, and I'm just going to take every trade. And really, there's a book called Trading in the Zone by Mark Douglas. I know a lot of people, I talk about this book all the time. It's like my go-to book when it comes to trading psychology. And what I learned from that book is something which today is just super obvious, but I had no idea about it before actually reading about it. But the thing that you have to view every individual trade as a completely random occurrence and with a completely random outcome, which is weird because we're trading and we're supposed to be making consistent profit. And how can we make consistent profit with a random approach? But we're not really trading with a random approach. We're just trading with a random, random approach mentally when taking one trade. And then over the course of 100 trades, it's the law of big numbers come in play, and every individual random occurrence have a consistent outcome. So having a random approach on an individual basis creates a long-term consistent approach, which is, it sounds weird, but it's so true when it comes to trading, because what that helps you realize is that you take the trade, right? And you, right before taking that trade, you accept the fact that this trade can go either way. Like, we don't know where it's going. It's 50-50. It can hit the stop loss. It can hit TP. It doesn't matter what happens. All that matters is we follow the plan of the system, which has, a consistent profitability over the course of many trades in a row.
Yeah. And it's kind of finding the order in chaos, to say. I know there's like in statistics when you are backtesting, for example, also a method called Monte Carlo simulation, where you test your system on random numbers. So this is like the ultimate chaos. And if that still works in your system, then you have found, the order in the chaos. Like you
Yeah, I
just said,
think
this is what you're trying to do. You try to find this edge at a specific time over the market.
Yeah, I think Monte Carlo is the approach that most like trading strategy simulations use. They give you like a certain set of outcomes, and they see like what's the best possible outcome, what's the worst possible outcome, and you want to be like, hopefully you're somewhere in the middle.
But you don't need to do that actually. If you are a beginner trader, no worries about that. You don't need to do the deep dive into statistics and advanced statistics. That is, in my opinion, already. The important message is really here, and I think you'll agree with me, is that you backtest your strategy. Just because you heard, oh, there's this awesome strategy that makes like hundreds of % every month and going to be a millionaire. Well, I mean, nothing wrong with testing this strategy by all means, but maybe don't try it with real money. Maybe, look at the strategy and then backtest it. How would it have behaved, for example, in the past year, or even better, in the past 5 years or 10 years? And if the outcome then is good, well, okay, try it on a demo konto for a couple of months. If it works, then try it with some real money, with some small money. And if you're then confident that it really works, well, then you can not go all in maybe, but then you can think about this automation process also, that you don't need to look at it anymore all the time.
All right, I think that's it for this today. It's interesting. I did have some plans to look at some shorts, but
yeah, me too. It's okay. I mean, yeah.
But we had some really good discussions here. I think people are going to like this, because even though it might not be the most exciting stuff to listen to, it's very important. And if it's one thing, or basically if it's two things you can take away from this, it's backtesting and take fewer trades. I think that is in my opinion, two of the most important things for new traders to understand is, if your goal is to make a certain percent, well, you shouldn't be having a goal when you're new anyway, but let's say your goal is to make a certain percent every month. Ask yourself, can that be done with one trade? If it can be done with one trade, you have to realize that all you really need is one trade a month to be profitable, right?
Exactly.
And that's nothing. One trade a month is nothing. And that's really where I am right now. The last proper trade I took using the system in like the Forex market was the 10th of December. That's almost 1 month now. Almost 1 month ago. And that was a loser. So December was a losing month, unfortunately. But I know that all I have to do really is to have one good trade a month, and I'm good. And in the meantime, when I'm not trading, I am supposed to backtest, because it's one thing that can happen is, if you're not getting a lot of trades, if you're not finding a lot of trades, it's easy to lose confidence in your system and say, my system is not performing well, it's not giving the number of setups I want. So do some backtesting. Look at last year, how many trades did you get last year, and then you do an average. And if you get an average of 1 to 5 trades a week, you know that you're just in a period of the year when there's fewer trades, like December, for example.
Which is totally normal, by the way, in December. So I totally agree with that. And in my opinion, your goal always should be to beat what your bank can give you, to beat the risk-free interest you can get. And like being in Germany now, I mean, our interest rates have risen here as well, but maybe your bank is giving you, let's say, 3% a year. I don't think any bank does that at the moment, but let's say 3%. So this is the risk-free money you can earn every year by just depositing this on your saving accounts with your bank. So this should be the number you beat. If you end up by the end of the year making 6% or 8% or 10%, you have performed better than the risk-free environment. Of course, if you bought making those 10% with a drawdown of 90%, this also wouldn't be good. But if your drawdown maybe is 2% and you have 10%, well, good. Then welcome to the league of professional traders.
Yeah, it's a lot of people are gonna hear that and gonna be like, oh, I can't make a living doing that. But it's capital. It's all it is. You know,
Yeah.
you need capital to be able to trade. You need money to make money. It's really that simple. Any last word of advice before we go?
If you're watching this, take what Lips said here and to a certain extent, hopefully also what I said, to your heart. Trade less, wait for the good setups, and always have your exit strategy in place as well. Be prepared. What are you going to do when the trade goes against you? Where are you going to exit that? Is that an exit that is going to destroy your account, or are you still able to recover from that? If you just follow this, I think you're already in pretty good shape.
Yeah, I think that's a great way to end this live stream, which pretty much turned into a podcast. I would like to thank you all for watching here today, and don't forget to follow Dirk and Prime XP Academy by using the link in the description below. Thank you for joining, everyone, and I see you in the next live stream, which will be tomorrow around the same time.
Take care, everybody, and thanks again for having me.
Take care.